Hi, this is Jerry, and welcome back to ForexTradingMagic.com. Now, we need to start talking a little bit about when you should exit your position early, when neither your profit target has been hit nor your stop has been hit. Okay, let's get right to it. This yellow line here I have marked, this is a breakout point. If we switch to our line chart, we see this high at this level here, and we see we have a breakout of the high right here. Now, this long green candle, this is our breakout bar. We broke above the high close of this level, and we closed above it. And as we talked about in our Footsteps series, after the breakout, you can expect price to pull back to the first support, or the first red bar that is below the close of the green bar, or below the breakout point. And before we get into something else, let's reiterate about stops once again. Since this is the red bar, this is the support bar, then your stop would need to go below the low of this bar. If this bar was a small range bar, then let's say the bar stopped here, then your stop would need to go below here. But after the close of the breakout bar on the way back down, this is the first red bar, and this is where we can expect the short sellers to start buying back to cover their position. But now let's focus our attention on the red bar that comes immediately after the green breakout bar. Now, as we talked about also in Footsteps, is that we want to enter the trade on the pullback to the first support bar. And so in this situation, after our breakout here, we would want to enter once price pulled back to this red bar. And these short sellers, they're now our friends, because they're going to help us bring price back up by buying back to cover their position. But now, this red bar, this pullback, this is called a reaction bar. The bar that follows a green bar that comes back down, or the bar that follows a breakout and comes back down on the very next bar, that's called the reaction bar. And the reaction bar is coming back down to test support to see if that support level will hold, and therefore it is called a reaction test. A reaction test. Now let's take it one step further. After the close, we expect price to perform the reaction test and allow us to get a favorable entry point. And as we can see on this example, the support level held and price moved back up. Now, this is important. Price moved back up in our chosen direction, but now we have to pay attention to where this bar closed, because it did not close above the real body of the red bar. And remember, green above red, the man moves ahead, and red below green, a downfall is seen. So now we've got a little profit going here, but we did not close above the red bar, and even more importantly, we did not close above this green bar. Now, after we enter on the reaction, we want to see that next bar close above the high of the breakout bar. You see, on the way up, you want to see closes above the high of the preceding bar. And we can see here on the next bar we got a higher close. It closed above all of these bars, so that's a good go. And on the next bar, what happens? The retracement back down. Most of the time the market will walk in that steady fashion. It'll take a green bar up and a red bar down, a green bar up and a red bar down. This is the walk. And on the way up, once you see, for instance, it's hard to see on this bar, but once you see a bar that does not close above the high of the prior bar, close out. It's time to exit. Now, that doesn't necessarily mean that price will not continue up, but it means that the risk of price not going up and at least moving down for a retracement has been heightened considerably. And now, once we move up here, we haven't had a retracement back down to test this support. So, in general, once we turn here and head back down, we really don't expect to head back up unless we test the range of this bar, or at least one of the red bars that are in the vicinity. And if we look, let's see where we got to. Okay, now we came down to this red bar, and that's not surprising because we broke above this high, but I don't want to get ahead of myself. But this is what we expect. We want price to move back down to test support, and that is the only way we can trust a further up move. But I'm running out of time in this segment. This is segment 1, when to exit early, and we're covering in this segment reaction versus retracement. And we've seen that the reaction is the first bar after the breakout bar. It pulls back. The reaction is to pull back and test prior support. Well, it's prior resistance. It was resistance until we broke above it. Now on the way back down is support. So I should be saying we're testing prior resistance, which is now support. But we'll pick up in the next segment.